Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking a look at Euro USD or Euro dollar. And as you can see here on the chart, so this is a 4-hour candle. These are 4-hour candles, by the way. And as you can see, this morning has been quite a bullish day for Euro dollar. We've broken beyond the previous monthly high, which was around 121.80. We've broken to the north of the 122 handle, and it looks like we're comfortably sort of settling in the low 122s, which is, if we zoom out a little bit, as we can see, this is the highest that we have been. Let me get rid of that arrow. Since mid-March, really. So in terms of the bulls, what's their next target? Well, this area here, the March high, which is at around 122.40, this one right here, that's the level you want to look out for the upside. And then beyond that is the annual, is that the annual high? Yes, it's the annual high at around 123.50. So those are the upside levels to be looking for. In terms of the downside, just quickly, I mean, I know we're not heading in that direction, but just in case we do see a bit of a reversal, the areas you want to be looking at, let me get the arrow on, is this uptrend right here, which links the lows all the way back from sort of the beginning of April, really. We've been in this uptrend. It's been well respected multiple times. Then if that was to go, we've got decent support around, oops, that's the wrong line. Come here. There we go, we've got decent support down here around or just below, well, around the 120 handle. That's been support and resistance on multiple occasions over the last sort of 2 months. And then you can see here, we've got these two moving averages. That's the 50 and the 200-day moving average. And as you can see, they're coinciding with each other quite nicely in the mid-1900s. But to be honest, guys, I can't see, technically speaking, the momentum certainly looks pointing towards further gains. If we do see a bit of a retracement, perhaps on some profit taking, can't get rid of this arrow. There we go. Then it's likely to just see us pull back. Let's see if I can get this arrow. Oh, it's a mess. Anyway, what I'm trying to say is, if we do see a bit of a retracement, it's likely to see us pull back towards this previous monthly high, which is around 121.80. And there you could find some support. And if we do pull back to that level, and then the bulls get involved again, they buy the dip and push us higher, that would be a bullish sign that this previous high from back in February is there for the taking potentially, or even the annual high. In around 123.50. In terms of fundamentals, why has Eurodollar been moving higher? Well, it's mostly a dollar story at the moment. So obviously recently there have been concerns about inflation, which would be bullish for the dollar if markets expected the Fed to counter inflation with higher interest rates. But the Fed have been signaling that they're going to look through higher inflation in the medium term. And that's actually a bearish combination for the dollar, because think about this: when inflation expectations rise, but the Fed wants to keep interest rates low, well, then that puts downward pressure on real interest rates in the US. And obviously real interest rates between countries, investors tend to want to put their money in places where the real return on their money is better. So the lower US real interest rates or yields, the worse that is going to be for the dollar. And for the time being, the Fed is staying dovish. Market conditions remain quite risk on with much of the West reopening and rolling out the vaccine well. And that could also put the dollar under pressure, which should, for the time being, keep Eurodollar supported. In terms of events this week, there's not really that much, to be honest. We've got PMIs, I guess, out of the US and Europe. That's on Friday. That'll be interesting. FOMC minutes, they're a bit out of date now because since the last FOMC meeting, we've had a CPI surprise, higher inflation than expected, and weaker than expected US jobs data as well, so they're going to be a bit stale, the minutes from the last FOMC minute. But yeah, other than that, guys, hope you enjoyed the video, and I'll see you all in the next one.